Hey, good morning all. Welcome back to a new week. Man, this week we have FOMC, pretty big event. You know, if you look at the daily, look at the way the daily right now is set up. Daily is just consolidating. You know, we're getting ready here for interest rate decision on a Wednesday. Yeah, exactly, on Wednesday. We should be having interest rate decisions, and that should be moving a lot of things around. So just be a bit cautious this week. As you can see, the daily timeframes are starting to wick quite a bit. And yeah, the daily right now itself is not trending. 0.17%. I've noticed there's been a lack of follow-throughs of late in the market. Like because obviously the charts themselves, you know, they don't look like they want to go anywhere right now. It's consolidating. So still getting like a little lack of follow-through. So there's going to be a higher probability of some lack of follow-throughs to be coming in. So just want to be cautious about this. Oh, wait, let me see. Did something change? We're using this line here. See what's going on here on the 5-minute. Yeah, I think some people are looking for a sells below this support region right over here this morning. So congratulations, man. If you caught like a sell, I think this is a pretty good idea here for a sell. Candlestick broke, closed below support. Beautiful range there on the left hand side as well. Pretty big range. So it's just currently correcting that move right now. Correcting it, coming down downtown. Yeah, no, this is definitely too big. Someone touched my zoom. Settings changed. Yeah. Yeah, well, good morning, guys. Good morning. What's that? Say hello, Finn. That's my bro. Oh, it's here for the stream today. Oh, nice. What's up, Finn? Welcome, welcome. I gotta buy that last red hammer. Got 0.8% from there. Yeah, this thing is like, this whole range here is a, how many pips? Let's see. It's about a 85.9 pips. Coming down nicely here. Jeez. But you know, the thing is, like, it was consolidating for a while, so I think it makes sense that price came down here because, you know, we had this massive sideways movement here to here. Candlestick started break below. Yeah, I think it made sense. It's just when this thing started breaking, this was 240. Oh, yeah. So this is shortly before the London session opened. 20 minutes before London opened. That took some time. That took some time to show up. But yeah, I guess there's like pre-London volume here. And you also got like a smaller accumulation within this zone here too. I feel like Zoom changed something. I'm really sensitive to changes. I feel like something here doesn't feel as a bit different. Yeah, so right now I'm waiting for some kind of a direction in the market here. I'm waiting for something interesting that I can take a sell continuation. Hey, good morning, tall trader. Yeah, so just gotta sit on my hands here. Then you go on to currency strength meter. Let's see what's going on here. We have the US dollar is doing pretty weak today. What else? What else? Yen is doing pretty weak. So pound should be moving up bullish. GJ should be moving up bullish. Okay, so we got dollar weakness and gold is moving down. Yeah, I think the main thing that the market's looking at this week is definitely going to be those interest rate decisions. Because like if you're expecting something else to move the market, I think it's not going to be a long-term movement. It's all going to be short-term movements until Wednesday. Let's see, do we even got anything before FOMC? Tomorrow we have core retail sales. See, something like this is going to move the market like slightly, right? It's just going to move the market, but we're going to really wait for FOMC here. I believe like there's going to be some kind of risk off. Yeah, so let's see how Monday and Tuesday pan out to be. Hopefully pretty good. Hopefully pretty good days. No trades for me though so far this week. But this is the daily massive consolidate. You know, in a situation like this, you don't even have to do analysis. You know, there's no analysis you could do. You just gotta like look at the candles and then see why candles are behaving like this. Most of the time, you're gonna see those consolidations come through like whenever there's some kind of a news. Market is gonna consolidate. I don't know which one's better. Bigger triangles, like bigger or thinner? Kind of got like a dilemma over here. Maybe I'm just gonna go like a little bit more thin. Yeah, so this is it. This is the main thing that everybody is now watching here. What is price gonna do next? You know, the thing is, you can still catch moves off the intraday time frames, right? You can still catch moves, but you're not gonna be expecting like bomba-clot trades necessarily. Bomba-clot! I think those days are behind us here. Days are behind us, so we're gonna wait. What I anticipate, obviously, is FOMC to roll by, and we're gonna get gold do something like this. And PA on gold is just gonna keep skyrocketing up. So this is like accumulation. It's like a small pause, getting in those orders. And then we're gonna start to move up here on Wednesday. So that's gonna be the idea with those US rate cuts. But whether there's gonna be a liquidity grab, maybe below here first, you know, we don't know. Maybe there's gonna be a shock in the water of sorts. Because yeah, a lot of people are expecting gold to move up. So you could have a scenario where there's some kind of like a liquidity spike first and then move up. Worst case situation, but we should just move up. No liquidity, nothing. Man, I think our Fed watch tool here is still at 100%. Yeah, let's see, Ellie. Let's see. I think it should still be at exactly 100%. 100%. So nothing has changed yet. Nothing has changed. Wow, this is awesome. 100% probability. Holy. I just want to open up an account where I'm just going to go YOLO buys for that. Fat stop loss, YOLO buys. Yeah, I see the 4-hour ranging over here. You can see the range better on the 4-hour time frame. Got support, resistance, accumulating orders. If rate cuts don't happen, it would be funny. Oh man, if rate cuts don't happen, you know Trump is gonna have a stroke with Powell. He's gonna be really pissed. Yeah, I mean, he's on the spot now. Powell is on the spot now. You know, amount of people waiting for these rate cuts to end off the quarter, the Q4. It's all like based on these rate cuts, man. The way Q4 is gonna go and the way people are planning themselves for the end of the year. We're all depending on this volume here. So, Mr. Powell, if you're listening to this, you know, give us those rate cuts. We need them rate cuts. We need that volume. Need that direction. Yeah, with price coming down here towards, I think, like 36.31. Or it's already like filled up most of the range. Good amount of the range there has been already filled up. With 100%, would the buys come now before the rate cuts and we could even see sells on the day of the meeting? Yeah, man, the buys have already been in the market. You know, that's the thing. The buys have already been priced in. They've been priced in since all the way back over here, sir. This is Friday's 22nd. This is when Powell spoke. So yeah, you see buy's already been priced in. Now it's just like they're holding. But it's interesting because they're not selling yet. There's not a good amount of selling that's going on here. It's still holding. You know, all these positions are still open because it's 100% probability that price goes up. All right. So there's never 100% of anything. It's kind of funny that they did say 100%. It should be like 99%. But anyway, you know, like price, you see no one is selling anything. Look at this. After such a strong parabolic move, and then you wonder like why we haven't even had some kind of a retracement yet. So yeah, I think that's gonna keep moving up then. Well, you definitely wouldn't want to be a hero, correct? You don't want to be a hero trying to sell something like that. You know, that's the thing. A lot of people, like a lot of traders, we kind of like to be heroes. You know, we like to take the opposite trade just so we feel like we're a hero. Even if you know price is moving up, you know, sometimes we like to take a sell. Even when we know price is moving up. I think it's just a bad habit, you know. Welcome back, Vic. 48 pips booked. One and done now. Moving to... Oh, to Tuesday. Let's go. You caught these sells? I think that's what it would be then. Caught these sells. All right, let's see. Trades taken. Man, sometimes I look at these trades and I'm like, man, Asia has some really nice moves. And then at the same time, you know, also London's just been ranging. But when London moves, it moves really good as well. At least it gives like some kind of push, you know? Some kind of push. Not a trending move necessarily, but some kind of a push. Then I look back at Asia. I look back at pre-London. I look at the New York session. I'm like, man, these guys have most of the time the follow-throughs. But you know, London, we have more of like the pushes, like small pushes within certain ranges. So yeah, I think if you're like on a higher time frame, you'd be better off getting your trades, generally speaking, let's say Asia pre-London, New York. Do we have bank holiday today? No. Oh wait, yeah, we do yen bank holiday. So GJ here should be kind of slow. Oh wow, look at this. We're breaking above 200 finally. Got a solid close above 200. Breaking a retest. Beautiful range on the left hand side here. Yeah, this is beautiful. Man, look at this. Price on GJ here can keep moving up. Breaking above 200. So let's see if it respects that region as psychological mark here to keep pushing onwards. So we just gotta respect. You see how I like break and retested it right now? So we must continue to respect this so GJ can move out of this gulag. Yeah, I'm still waiting for gold to at least maybe show me some sort of direction. I think the way it looks like, we might not get any direction here on the daily. Let's look at the Asia open. So we got Asia lows right here by 36.26, and we got Asia highs up here by 36.46. So let's see, that daily candle has done a total of 200 pips. Yeah, I don't think we're gonna go anywhere. I feel like gold might just bounce in between ranges. But for us to trend, we have to maybe at least come down here by 36.28. Just really see that daily candlestick start to move somewhere. We've already been there once. Today. Yeah, but we got like a daily support here as well. Looking sharky. It's looking quite sharky there on the HTF. But lower time frames seem to be alright. You know, we got accumulation. So we had accumulation, also like a kind of like a head and shoulders here too. Got left shoulder, head, right shoulder, and then that would be the volume that came in. Came in here, so price can continue pushing downwards. I still don't know what to do. Should we go with a thicker line or a thin line? Yeah, bro, sells. Yeah, if you were thinking sells, then you should have waited for price to retrace first up. Because now price has already moved. You know, it's down towards the support. Build up majority of this range. I mean, you could probably squeeze something out here, but yeah, you know, you got about like 27 pips. Stop's too big for me, so I didn't take the sell. Um, 10 pips from entry, sad. Now we wait more. If rate cuts doesn't happen, it would be funny. Stop's too big for me, so I didn't take sell. Yeah, let's have a good week here, guys. Let's have a good week. Everybody looking for something. Gold isn't worth 3,600. It's worth more. Yeah, we gotta get more. More gold. More. We already hit the all-time highs at 3,674. At 3,700. Man, we're gonna see like 4K by the end of the year. $4,000. $4,000 per troy ounce of gold. Yeah, I think $4,000 should be realistic. You know, I think the analysts, the experts are talking about 30. What did I say? 3,800. It's also pretty good. But I think, you know, with this momentum, we could definitely get to 4K. We could definitely get close to 4K, at least 3,900. Because it's not just one rate cut. We're expecting like 2 this year by the time the year ends. And the distribution here is going to be beautiful. It's going to be basically a classic consolidation breakout entry. I think it's going to look really clean on the 4 hour if you're trading the higher time frames, because this would be the accumulation here, resistance, and you'd have support. So it'd like start breaking above that region. Break that wick, and then candlesticks to keep moving upwards. So that's the analysis for gold, guys. Hope you enjoyed it. Hope it gave you some kind of a direction or a feel of the market. So at least now you know what we're expecting, you know what we're anticipating, what you can expect on the higher time frames, and just, you know, closely monitor the lower time frames. In case you see some choppiness, now you kind of like understand where that could also be coming from. What's your leverage? 1 to 200. 1 to 200. Which is still a bit overkill for me. I don't even need that much. I secured my sell when the 5 minutes started making structure. Secured 0.5% on challenge. 1.2% secured on personal. Well done, sir. Yeah, I'm only up for the month. I think about like, you know, 14%, which is not bad. 14%. We still got 2 more weeks over here. I think it can be good. I think September can be a pretty decent month. So yeah, we just gotta continue being disciplined, continue being patient. Man, like every time I'm not disciplined, I'll just take a loss. You know, it's like I took a buy last time on I think a Thursday, And I was like, you know, let me see if I can see this thing play out over here. It was like a buy like this, but then I knew this was a counter trend, but I still decided that I wanted to become a hero. So, you know, this was my buy. It was such a clean buy as well because, you know, we had price kind of like break above resistance. So the idea here was price was breaking above this resistance. You got a shotgun play entry. You have 8 SMA right over there. Super nice clean range on the left-hand side. And the idea was for price to keep moving upwards. Not the whole way up, but I would have preferred like some kind of a correction. But you know what? Because of the market right now, the way the market is, I've been seeing like this selling pressure is pretty strong. So you got to see how different market conditions really affect your trades. Like you all have realized, if you ever have a gut feeling, you know that gut feeling where it's like you feel like, man, there's a lot of selling pressure. But at the same time, price might be bullish. But at the same time, you're seeing like a lot of these sells play out, like the market's like selling heavily. Yeah, that's kind of the environment that we're in. So I think that's also partly a reason for why these buys didn't play out here. Why this buy? It was a counter trend, but at the same time, we also had that. It's like, how do you explain it? You know, when you've been trading for a while, there's like, you can sense a different kind of market. You can sense like if the market is favorable, if it's not favorable, like throughout the weeks, you get a feeling for that. So, you know, we're still warming up here for this week. So we're going to see what the market does. But we're still expecting it to range of sorts. But, you know, it might give us some decent moves within these ranges. Seen a guru in Instagram who sells signal. Their signal was buy while I was in a sell. I was like, someone has to lose. Yeah, someone's got to lose. Somebody, when you win a trade, somebody loses a trade. You know, so it's like that. It's like a zero-sum game. You could think about it like a zero-sum game. So someone's even right now losing as price is moving down here. Someone's gotta lose. So you see, if someone's gotta lose, then you have to really believe in your position. You know, if someone's gotta lose, you've got to really believe like in your analysis. Because if you don't believe in your analysis, then you know the person who has less to lose is going to win that trade usually. So usually those are the people trading with the trend. You know, they have more of the trend in their favor in Confluence, and you're trying to take a sell over here, and you know price is moving up. So it's like your team will most likely sell their positions or like close their positions because they know price is moving up. You know, because we know these things. We know these things. When we take these kind of trades, we know what we're doing. So the moment it starts to go against us, there's a higher probability that you close those trades. You know, if you're not confident in your analysis, and then you know it's a losing position. Like today, you can see on the consolidation on top, once price moved top of the range, instant push down 1 second. Yeah, we're still seeing that. Exactly, we're still seeing this bearishness. You see, that's why I was showing you that example of the buys earlier, because this is like the same environment that I'm talking about, where it's like we're seeing these sellers coming in, they're coming in quite heavy. Slow down to 5-minute FVG after breakout and retrace. Yeah, so now we got to wait and see. Let's see 15-minute. I think we can safely say that sell is already played through. Man, you only got like some kind of a resistance up here now. Resistance. Potential for price to move up above this resistance by 36.37. But I'm still gonna be waiting. This is like 47 pip range from here to here. Then you also got a support down here that's been formed towards that next zone. Talking about like 24 pips. Actually, another small range. If this candlestick closes bearish, it's about 15. Man, but these are like the best trades right here. So like when price has just been hovering in an area for a long time, those are the best trades. Usually. Those are very nice. Very nice trades. Because you've given the market time to set up, in a situation like this. Whereas this is like you're trading the momentum. So it's like you want to feel, you kind of want to feel good about the trade that you take, really good about that trade. Because you take a buy, you'll still find a bit like risky because price is coming down. You see, price is still moving bearish. If you take a sell, so you're trying to catch a continuation. Basically, so let's see, boom, boom, boom. Could you have caught something here? Nah, you couldn't have caught something. Even on the 1 minute time frame, you couldn't have caught anything. Like the way the structure is formed right now, it's just like it just moves straight down. I think 36.22 today. What do you think, bro? 36.22? Yeah, I mean, we could. It's definitely within reach. I'm thinking more sells as well, but because we're already down 0.20%. So I kind of want price to get to a trend as fast as possible. Because right now we're just getting this kind of like short-term plays. There's like some short-term sells here and there. Maybe get some buys, play within the range. It's like a mixed bias. Gold edges down as profit-taking seen. Gold dropped below 26.30 per ounce on Monday, retreating from last week's record highs as investors booked profits ahead of crucial U.S. Federal Reserve decision. Traders are now pricing in a 25 basis point reduction this week amid signs of labor market weakness and some potential for reductions extending into next year. Before the Fed's decision, attention will be on retail sales and industrial production data, which could offer more signals on the strength of the U.S. economy. Yeah, we got retail sales tomorrow. Meanwhile, the Trump administration on Sunday renewed its request to Federal Appeals Court to fire Fed Governor Lisa Cook, raising concerns about the U.S. central bank's independence. Elsewhere, market participants are also closely monitoring U.S.-China talks, which enter their second day of negotiations in Madrid. Yeah, exactly. You see a little bit of profit taking, but they're not taking too much. Like you get profit taking here, but just securing something from the move. They're still expecting it to move up though. So they gotta secure like partials. Like institutions, they can secure like partial profit. So it's always good to take something off the table, guys. FOMC incoming. What month is it? Next month? It's October. Next month is going to be October. Is that Halloween month? Isn't that Halloween on October? We're gonna get freaky October. Oh, Halloween is at the end of October, the 31st. Oh, and look at this. It's on a Freaky Friday. Freaky Friday. Nice. Yeah, I hope price can move up. Oh, price can by this time, you know, rate cuts should be in the market. Gold should be moving up bullish. So it should be good. Ooh, what is this? Oh, I got an Easter egg. Wow, what is this? Oh no, what happened? I just wanted to do it full screen. I found an Easter egg on Google. Alright, let's see. Skip the tutorial. Tutorial is for pussies. Waiting for players. Ooh, music's kind of loud. Hey, somebody join up. But I love these things that Google does. You know, like on holidays, they usually have these like small Easter egg things. Yeah, I got price coming up here towards 36.36 now. 36.36. Gotta see if, you know, maybe it breaks above resistance. Something feels weird about my screen. Wait, let me see the display settings. What's going on here? Everything feels a bit smaller. Oh, okay. Oh, I see what's going on here. Damn. Damn, Daniel. Damn, Daniel. All right, let's go keep changes. Damn, Daniel. Oh, now you see, now the screen's all fucked up here on Zoom. Yeah, I knew this would happen. I knew this would happen. Wait, let me go here on my display settings. Oh, this is really fucked up here. Told you guys, I felt like something, Zoom had changed something or something was not right. How the flip do you... Gold is starting to push above now. Damn, didn't even get candlestick close. It just kept running up. Yeah, I couldn't. The only way to have taken this position here would have been, it would have to be some kind of like an impulse trade. some kind of like an impulse entry. Because price would not have given you an opportunity to wait for candlestick to close. So like some kind of an impulsive entry, like a swing entry model. Expecting price to continue moving up towards a 36.42 there at the break of this wick high by 36.37. So I got in time 35. What's your strategy, Vic? Just price action, candles, volume, basics. I think the basics, they work the best, you know. Basics of volume, basics of understanding how price moves. Like when is the highest probability that you're gonna see some kind of movements? You know, that's usually when you get like a wick break. Wick breaks confirming momentum. Understanding where's resistance, where resistance points are. You see we got resistance from here to here. So that gives you a potential of 46 pips for price to move up. You know, just so simple like this. Yeah, I think that should be fine. All right, nice. So what happened was I had my monitor set at a 40, what is it, 2K? I had it set at 2K instead of 4K. There we go. Okay, now everything seems fine again. Okay, perfect. I thought that was a Zoom update. Yeah, because 2K kind of zooms everything in a bit more. Yeah, but that was the second move. This would have been the second opportunity here as price was breaking above 36.37 to keep moving up. So you can see what happened here is the same thing. Below here, that price came down like this, broke below this wick, filled up the range. Price came down, created resistance, broke above the highs, filled up the range. Yeah, nice. This was textbook on the 1 minute. Let's see what the 1 minute was saying. Yeah, the 1 minute here. Oh, wow, man. Look at this distribution. Just got straight candles back to back. Beautiful. Awesome. Now you gotta wait again. Now you gotta wait again. Because you see, that's how the market, it moves in these kind of like, in this kind of phases. Where it's like, you know, if you miss a sell idea, then, you know, then you're going to prepare for the buy idea. So if you miss the buy idea here, now you have to wait and see what kind of structure is going to be formed for the next move. Because right now, for price to continue moving upwards, you have multiple resistance levels. So you got resistance here and here. So that's not too good. When you got resistance like this, it's going to be harder for price to move past these points. You know, so I think the next thing is maybe if you're going to wait for some kind of a support to be formed first and then anticipate that price can continue to move down bearish. I think that'll be the next kind of like potential, because you've already missed the move here for the buys. First try was really small risk, but second entry was 2 times first. 2 times fast. Oh, wow. Oh, you still took some bit of drawdown here from this move and then scaled back in. Gotta sell now from the top. Yeah, I see. Like now we just gotta let price go. It's gotta set up again. See how everything here is looking. All right, awesome. 4-hour failed to take out previous 4-hour low. For me, this is a prime signal to take out previous 4-hour high now. We took out the previous 4-hour support. It didn't take out this low though. That's the Asia lows, 36.26. Man, it's in a very sticky situation, because even if you look at the 4-hour here, you know, the 4-hour has some kind of, it doesn't have that much space to move anywhere. Resistance up over here and you have support down over there. So not a lot of room for price to move on the HCF. That's why I'm saying, like, man, be very cautious about these ranges that we're in, these consolidations. So if you're looking for a buy off the higher time frame, you know, you also got to consider these other levels. If you're if you're expecting a runner, you know. That was a nice follow through though. I think it trapped some sellers here. Looking back at it, looks like we trapped some sellers as well. Some additional confluence. So if you're looking for the buys here above resistance, you know, price came down, it took out these lows, slightly broke below this wick low over here, and then started pulling back up again, re-breaking these highs. So a nice little liquidity grab situation over here. Now, because the sellers are going to let go of these positions as price starts to move up against them. Now the buyers start to take back control of the structure as it breaks these highs. See, then it's just a probability thing. So if you took like a buy here, it's just, you know, what's the probability of this move playing out over a duration of, let's say, 100 trades? Out of 100 trades, how would you execute this trade like consistently? You know, and what's the probability of this becoming like a winning trade? So I think usually you have a pretty good probability because, you know, price shouldn't be breaking these highs if it still wanted to continue moving down bearish. But you see now, since it's already filled up the range, what can you do now? Range on the left-hand side's already been filled up. Are you going to take a buy here? You know, why take a buy here? Because if you're basing this trade off a 5-minute time frame, you've already missed the move. You know, the only time you're going to take a buy here is maybe you're going to go on the 1-minute time frame. 1-minute time frame and just wait for something to set up, something similar like what happened over here. This will inception. So you got a similar price action and then have that follow through. Let that accumulate orders and then follow through. So if that doesn't happen, then, you know, you can't do anything because there's not going to be enough volume to break these levels. So you just got to be patient. Just got to sit on your hands. I took it in on the 1-minute probabilities made sense. Let's see. This morning's long against the trend after an Asia TPI went full Monty on the test down 36.35 from 44 level. UJ and GU showed significant momentum out of the dollar to confirm. Oh, what is this? Where are the triangles? Does an MT5 have triangles for in and out of positions? What's this red box here? Yeah, this was a move. This was a move from this morning. Clean range on the left, SMA confluence, break out of consolidation, break of previous lows. Awesome, man. This is an excellent analysis. You know, I think this was perfect. This was the main wick as well. That price needed to break so it could continue to move down bearish. So you see how it broke this wick? Beautiful range on the left-hand side, confirming that move downwards. Yeah, I think that made sense. Now you see it's the same thing here. So markets are kind of like just mirroring each other. Because now we're getting the same exact thing happen over here. See, came downwards beautifully. Mirrored that move. Now we moved upwards like this nicely. Mirrored this move here as well. So no shocks in the water, and this is what we call clean PA. This is clean price action. No manipulation, nothing. See, like, look at the way the wicks are forming here as well. A little bit of indecision here as it's approaching that resistance point. See, it's thinking about it. It's looking at these zones. You see how the market operates, how it behaves? It's looking at this zone here on the left-hand side. And now it's thinking to itself, like, how can we move past this resistance? You know, it's looking left. It's like when you're crossing a road and you see traffic. So you see now you got traffic. There's like this is like a green light here for the traffic on this side to keep moving this side. You know, and now you got a red light right over here. You got a red light here and you got a green light over here. So you're going to see the flow of traffic is going like this right now. So, you know, so now we got to wait. Now we got to wait and see if Bogdanov here There's going to be the traffic instructor. You know, right now is waving in these guys. With this Bogdanov here can now say that it's okay for this price here to move past this zone. You know, because we got resistance right here on the 5 minute. So if he says, you know, we can move past that zone, then we can start to see some kind of a momentum open. So we're going to see price start to move through this level. But you got to always look left. You know, you don't cross a road. You don't cross a road without looking both sides, right? So let's see what's, you know, the traffic is building up. So you know what traffic buildup is? When price consolidates like this. So you see traffic is now building up. So this guy over here now is looking at this and is thinking to himself, man, we gotta let these guys go through soon, you know, because now there's too many cars over here. Too many cars. Like this side has already had enough flow. So you see, that's what's happening now. I think now the cars are coming in. Now he's waving these guys in. He's saying, all right, so now you can come in. You can come in. We gotta distribute these orders over here. Make sense? I think it's pretty good. Pretty good way of explaining that resistance. Emergency stops are down 35, 50, 85. Man, so much value on the stream, guys. Only if some of you knew. It's just like, you know, when you're a super new trader, some of these concepts they might be a bit elusive. They might be elusive until you see it happen over and over again, and then you're gonna be like, oh wow, that makes sense. You know, that's starting to click now. So you don't base it. You base that over a good sample sizing. So that's why a lot of people are gonna, like, you know, paper trade for a while until they gain confidence to actually start taking those trades. You know, because if you take a trade and you don't really understand why you're taking that trade, then it's like, it's taken from a place of like low confidence, you know, so you're kind of just happy if it plays out. You know, you feel relieved that it plays out. But if you understand the sample sizing, you understand the data and the concepts, then, you know, you're pretty stoic for the long run and you don't get fazed by the market too much. See, now the traffic guy is saying, all right, so, you know, you accumulated here, just as we said, you know, as price approaches these zones. The thing is, like, for price to break this level, we needed to have some kind of accumulation here. So we've seen that happen in the market so many times before. Accumulate shortly before it breaks certain key marks. I'm a new trader. I'm trying hardest to understand. Oh, welcome, Wayne. You soon will be Bruce Wayne of trading if you stick to the stream for, you know, like, give yourself a quarter. Just like one full quarter of actually trying to understand these concepts. You know, we had one guy the other day, he said, man, I've been following your signals. I just used to buy and sell on your stream until for like, how long did he say? Like a few months, until he started locking into the concepts and the strategy, and now he's 200K funded. You see, now look at this. Now the traffic man is saying, come on through. And now the traffic here on the left-hand side, now that traffic is paused. So, you know, so we got like a pause over here. And now you can get the flow of orders to continue moving up bullish. So, you know, the candles are always leaving a kind of like a blueprint, or it's kind of like speaking to you. So, you know, that's why it's important to learn how to read candlesticks. And if you can't read candlesticks, then you can't trade. It's the same way as if you can't read how to understand traffic laws, then you can't drive. Because, you know, if you're going to get onto a roundabout, you're going to hesitate. You're going to hesitate and cause an accident if you don't know what lane on the roundabout to use, or, you know, like who has a right of way. If you don't know who has a right of way, you know, sometimes you can make an accident there. But when you understand how to drive, like, and you understand how to trade, then you see it becomes natural. When you're driving a car, you don't even think about it. You know, everything at that point is already automatic. You already know what to do. You know, so that's the same way with like the way I trade and TFX concepts, or any other strategy that you trade. But it has to make sense to you. If it doesn't make sense to you, then you shouldn't trade. Just the same way, if you travel to a new country, you're not going to drive in that new country if you don't know shit about the road rules, right? Maybe it's like it's too foreign. It looks too intimidating. You're not going to drive in that country. You know, maybe you're used to like slower roads. Maybe you live in a village. or like an island somewhere, you're used to smaller roads, and then you go to like New York City, for example, and things there are a bit hectic, so many road rules and such a different structure that you're not going to feel comfortable driving in New York City. You know, it's like the same thing as in trading. So you just gotta like, you gotta find yourself a system and then stick with that system, you know. But if you're bouncing around too much, then you're always kind of like having to build that confidence back up, you know. If you stick to a system and have some foundational rules for yourself that you can always build upon, I think that would give you a lot more, it would give you a lot more growth. It would give you a lot more growth whenever you're taking it step by step, you know, and keeping some of the foundational rules the same. That won't change, correct? Those rules should not change. It should kind of remain the same way. You know, if you ever look at finances, right? So if you start budgeting, so have you ever heard about this thing where it's like 60, let's say 60, 10, 25? You know, there's a budgeting thing where it's like 60% of your finances, those are going to go to your needs, correct? You know, these are like your house bills, electricity, water, phone bill, like everything you need. Let's say 60, yeah, like 60. Let's say 65. Sorry, my bad. 65, because this needs to add up to 100. Yeah, all right, perfect. Yeah, 65. So it needs to add up to 100. All right, so those are going to go to your needs, correct? So 65% is going to go to your needs. 10% is going to go to your wants. You know, that's like your Netflix, your cheeky takeaways. And then 25% is going to go to savings. Right? So 25% is going to go to savings. So you see this structure over here. This is a foundational thing. So you've got like a way now to budget your money. So it doesn't matter now if you're making 200K a year, if you're making $500,000 a year, like you've got the foundation. The only thing that's going to change is maybe every now and then the numbers are going to shift a bit, because now maybe you're in a good place in your finances. You can say, you know, instead of 10 over here, maybe I can increase this 10. You know, it depends on your goals as well, if you have debt, etc. But anyway, you can maybe increase this 10. Your wants you can increase, you know, because now you're in a good place, because maybe you're not saving for a house anymore, or you're not saving for something important, so you can reduce it on the savings part. You know, this is also part of your emergency fund. So, you know, the idea here is you have a system in place that's not going to change. This is your foundation. So moving forward, you can always like build upon it. You can change it. Maybe, you know, sometimes the market has a lot of volume, so you need more pips on your stop losses. And it's just the same way as adjusting your wants to your savings and that thing. But, you know, the needs, man, this thing should most of the time kind of like remain the same. The needs to some extent should remain the same. So you still need some really core concepts in your strategy that you're really not willing to budge on. So for example, a core concept of my strategy is accumulation breaks. So if I'm trading accumulation breaks, it needs to always remain the same. That's my 65%. And then the rest can always shift based off of a current market conditions. Oh, but yeah, now look at this. You see, price here is now moving up. Beautiful. Just like we spoke about. Remember, drink more water, chat. Just like we spoke about. With a very nice example there that you can even teach a 5-year-old how to trade. You know, because whenever I think of explaining trading to someone, I'm thinking, how can I explain this to a 5-year-old? You know, what's the best way? So if I'm explaining finances to a 5-year-old, then I'm like, okay, you know, I've explained to you that 65, 10%, you know, 25. So if you get like a dollar bill, here, son, so this is how that's going to look. So you're going to get 65 over here. You know, the more visual you put it, the better. Then they're going to like, people are going to learn a lot better. So, you know, this would be like 65. So imagine this is your money. So for every single note that you get, that's going to be how much you got to spend on your needs. Those are going to be your wants. And the rest of it here, let's make this like this. And then the rest of it here is going to be your savings. So that's how much of a dollar you're gonna manage. This is how you're gonna manage your money. You know, and then you give them a foundation like this. Man, these are things you don't get taught in school. Man, that's why a lot of people, even, you know, it's better to understand how to manage your money than it is to, let's say, get to solve the income problem. Because if you solve the income problem, you feel good because maybe you're getting more money now. But it's the same reason why a lot of people, a lot of famous people, you know, as well, they go bankrupt, they go broke. It's because they never learned how to manage the money. But they got like these mansions, MTV cribs, they got the supercars in the lot, and they've never learned how to manage the money. So when shit hits the fan and they don't have that emergency fund, then what happens? They lose everything. You know, they lose it. Despite them living it big, they still lose everything. So it's better to learn how to manage your money than to get more money. Because a lot of people in trading as well, we're always thinking about how can we get more money? You know, how can I get funded tomorrow? 200K, $500,000. You know, how can I get funded tomorrow? I want more money. But we haven't even learned how to manage our trades. We can't even manage a $500 account. How you gonna manage a 50K account? You know, you're still gonna lose money. It's still gonna lose money. And at the end of the day, even if you make that money in trading, you could also still lose it outside of trading. And I've seen this happen to a couple of traders before. Very successful, made a lot of money, splurged it on a lot of stuff, but they never learned how to manage it. It's equivalent to seeing a guy parked in a Lamborghini outside of your house, which, you know, they're still paying rent in an apartment and they don't own any real estate, but yet they drive a supercar. You know, that's that mentality. And the whole idea behind trading is that it's going to give you these sort of like foundations, you know, this sort of like character development. The problem is, like, if you get it too quickly, you jump the character development phase. And that's what you need to keep you in the game in the long run. You know, like, I think, well, what's the statistic? 56. I think around 56, somewhere around 56% of Americans don't even have 30 days worth of savings. You know, so if something pops up, you know, then what happens is they kind of like, they have no savings. I think this statistic's even higher than this. It's probably like higher than this, maybe like 56 to like mid 60s. They don't even have 30 days worth of savings. Because, you know, like, who's going to teach you these things? Nobody. That's why it's important to always like seek knowledge. The best skill you can ever the best skill you can ever have for yourself is the skill to figure things out. You know, that's the best skill. If you got a problem, you figure it out. That's why, you know, like, your employers, man, your employers are going to love you. The employers are going to love you if you don't ask too many questions. So if you got a problem, don't go tell them the problem. Go tell them the problem when you already have the solution. You know, then they're like, this guy's a real shock. You know, gotta keep this guy on board because he's soon gonna leave me. You know, because he knows he can't control the sharks. He can only control the lemmings. But if he sees real potential in you, he's gonna want to keep you around longer. I have a friend in trading. He still thinks his problem is have small amount on their account that makes him fail. Already told me makes no sense so many times. He just keeps doing the same thing over and over and blowing small account. Sometimes he gets 100 to like 700, then blows it anyway. Wow, you see, that's exactly the thing that happens to so many people. I've had students like this who've taken it to such, you know, they've gotten such a high return, but they knew it was kind of like luck, you know, and that's the reason why they were in the class with me at that time, because they knew they got lucky. So, you know, if you're smart enough to understand these things about yourself, you know, you're gonna go very far. But the problem is, majority of people, they don't know this. They get lucky and they think they can just keep getting lucky. You know, I also had that same problem myself. I thought the reason I was unprofitable is because my account was too small. You know, it's like, it's the same thing. It's the same thing as, you know, when you have a night out, when you go out with your buddies and you spend too much money, you don't even want to look at your bank account the next morning. You know, you kind of just like avoiding it. So we all, you know, at some point in our lives, we've done this. Maybe we still do this, is because we know, we even don't want to budget, because we know once we start budgeting, we're going to realize, oh shit, You know, this is bleeding here and there. But that's the whole idea about being a business person and entrepreneurs. Like, we got to get comfortable with money. You know, we got to get comfortable with having these hard conversations about money. You know, that's what makes a good entrepreneur. But most people, they kind of shy away from that topic. It's a bit taboo to talk about money in some societies as well. So also depending on your upbringing. So, you know, like, don't get it twisted. Like, that's all tying back into trading. Trading is also a business. So you got to think about, like, every single day, how can you manage your finances on the charts? Right? It's a good habit. It's a good habit. So you see what happens is when we're thinking that the account is too small, that reason is we're not profitable is because we don't want to have the hard conversations. You gotta, like, look at yourself in the mirror and then start having those hard conversations with yourself. You know, because a lot of us, man, you get these influencers talking about funded programs, and it sounds so good, but you know you can't do it, but you still would love to try and maybe get a payout. You know, which is kind of like counterintuitive because you're gonna spend more tuition fees, whilst you could keep your tuition fees low, get profitable, and then do it. You know, prove to yourself, if you can have a $500 account and you can run that $500 account to, let's say, $1,000 in 3 months, withdraw that money and apply for a funded program. You know, that's what I would say would be the best thing to do. Respect, Tetra, your consistency is admirable. Thank you, thank you. Why don't you consider the ATR? It's just the same reason as to why I don't consider trend lines. I just don't. Man, beautiful. Beautiful break over here. So you see stops below here. Awesome. I think so far, if you've been paying attention, you know, like this doesn't seem like to be any shocks in the water. So everything we spoke about here so far, you know, is playing out nicely. Break above here to here. Beautiful. We spoke about how price needs to look on the left-hand side. The reactions we're getting from this zone right here and how we consolidated prior to breaking. And, you know, that's something that price action tends to do a lot. And we got pretty much everything happen here. Nice. Man, you know, even like when you paper trade like that, it just gives you confidence. It makes me feel good. Makes me feel really good. It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. Oh, yeah. I mean, that's true. Yeah, that's true. Ben, you got to be very cynical about the choices you make in life. Because, like, if you know something for sure, that gets you in trouble, right? That gets you in trouble because you know why that gets you in trouble? Because you're not moving correctly. But you're like, man, this is the way I gotta go. But you're not moving correctly. So, you know, you can't change that mindset. So let me put it into perspective for you. Imagine a plane, right? So let's say you're flying over here over to the UK. And then you can say the US, you know, you got the US right over here and you're flying. This is your destination, right? So you're going to start your journey over here. This is not scale to, what do you call it? Scale to size. But yeah, you start your journey over here, right? So this is a plane. So you know for sure, yeah, you know for sure you're going to the UK. You're flying to the UK. But you know, a plane, if a plane is even just a few degrees off, that could change drastically the place that you're going to reach. Just a few degrees off can change completely your destination. And you know, it could be such a small detail that, you know, you can overlook, because in the grand scheme of things, you're not going to notice it just a few degrees if you're eyeballing it, correct? It's just a sky. You start off straight. You think you're still moving straight, but you're not. So it's the same thing about decisions that you make. So if you think you know something for sure and there's a chance that you could be wrong, or you're not open to navigating, you know, maybe turbulence, you know, sometimes it's turbulence and you gotta like, you know, take a different route and then get back on route. If you don't have the skill to do that, that's what's going to destroy you in the end, you know, because you're going to look back at it, and to make this correction is going to take a lot of time. You see, it's going to take so much time to make that correction, because you're going to realize maybe a bit too late that, fuck, I'm off course. So you got to go like, you got to travel that distance back onto the straight line again. And you know, the sooner that you can realize that, the better it is. That's why every step of your journey, take it and then be cynical. Take it and then be cynical. You know, take it, then be cynical. So you're actively getting better. And the more cynical you are about things, the more you start to understand more. You know, you start to really like, you know, in science, there's this thing called, I think it's called a null experiment. So what a null experiment is like you're trying to prove something wrong more than you're trying to prove it right. Correct? So, you know, just the other day, they found like organic matter on Mars. This looks like it could have been created by some kind of like living organism. And now they're going to run like some null experiments on that. So they're going to prove it more wrong than prove it right. Because, you know, we all want to believe in aliens, but we got to take the rational route by trying to prove it wrong first. So, you know, so far they can't prove it wrong that it was not created by a living organism so far. You know, so you got to do like a similar experiment for yourself in trading. You got to give yourself a null experiment. So you're always trying to like prove yourself wrong. You know, you prove yourself so wrong that you know that this is the right path, because you've exhausted all other avenues. So you know that this is the only path to go, because you can't think of anything that will go against what your strategy says that it should play out over a good sample sizing. You know, because if you try to prove yourself wrong too much in the market, it's like the market always gives you a reason for why you lost a trade, correct? So you also have to find like a good balance in between that. And the way you do that is by having a sample sizing, a good sample sizing of data. And then you're going to really truly and build that confidence that you need. That was a nasty one. What happened, sir? What's your bias for gold today? Bearish? No, right now we don't have any sort of bias in the market. Like, market's just mixed bias. It's currently down right now 0.02%. 0%. The daily is a doji basically over here. So look at this. Massive wick, massive rejection wick, daily candlesticks like a doji. So can't do anything. They just distributed a couple orders here. You know, this was the last play, which is a break above these highs by 36.42, and that's it. Now what you're seeing right here is like profit taking from this move that previously played out right here. It's got a bit of profit taking. Now it's coming down towards support. You know, you got like another support area here. Below that support, you have a new range. That's going to be about like 51 pips. 51 pips potential fake out situation that happened here. You got a few rejection wicks by the highs. I just want to see if a candlestick can close below support. Something like this. And then you got to break the neck. You know, the thing about the impulse entry is if you get a bearish candlestick, then the bearish candlestick lows, they need to get broken for price to continue to move down. Or yeah, basically that would be when you're going to confirm direction, the wicks. Or like even for an impulse entry in general, you know, you have to break wicks to confirm movement. So you got to wait for some kind of a structure to first form here before even looking for a sell, because we're still, you know, trading above 36.41 right now. You know, break below that, maybe even break this wick. Washing machine till Wednesday? Oh yes. The washing machine. This will be a very difficult challenge for me. Last week was hard. Got a bit like last week was a little difficult. It was a little difficult because, you know, obviously the daily's not going anywhere. The problem is, like, we only realize these things in hindsight. It's usually after the fact then we realize we've been trading in a consolidation. Then we're like, shit, maybe I should not have been over trading, you know? And that's the whole idea behind taking 1 or 3 trades a day. Because if you take like 1 or 3 trades a day, you're going to avoid yourself from those situations where you're going to look back at your day and say, damn, there was nothing I could have done. There was nothing I could have done to avoid those whips. Because there are going to be days like that. Like, remember that range we were on gold? That gold consolidation we had last week? It kind of like struggled to break out of it. It broke out of it like a few times and kept faking out back into the range. I think it broke out like twice during the London session and distributed like more towards pre-NY. It was right here. See, that's what happens when you overtrade. So you're going to take a buy here, you're going to take a loss. You got to take another buy here, you're going to take a loss. You know, at that point, once you take that second buy and you find that to be a losing trade, you know, you're not going to feel like taking the third trade anymore. And you see what happens here? Now that's going to be like the third trade. Then the third trade plays out. But if you stick to like 1 or 3 trades a day and you take 1 trade per session, then you're gonna give yourself a better chance at actually getting those losing days to turn around into winning days. Because you're gonna take a loss here and say, okay, you know, it didn't work out. Because it should have worked out. If you took a buy at that time, at that specific time, it should have worked out. It should have played out in your favor. But you see, then it didn't. You get a whip, you try again, you get a whip, unnecessary. Could have just waited for pre-New York, take a loss here, and then take a W here. So you see, like, patience. Patience is key. Not overtrading is key. The only way you're going to fail in trading is when you overtrade or over-risk. That wick was nasty and took an L, and I'm down 0.05% on my funded minus. Not bad. That sounds not bad. 0.05. Very good. Little accumulation here again. Small little accumulation. Came back to retest this previous zone here. Yeah, and you see, that's the thing. Like, we could still see price move, but if you look on the left hand side, you still had those resistance points. So you see still pretty important areas over here. So it will definitely make it a bit more challenging for price to get through these points. Even though, you know, the traffic man, he said like, okay, you guys can come through. But he's meaning more like, you know, buyers can make money, sellers can make money. But if you're too greedy and you're expecting price to skyrocket here all the way up until the all-time highs again, it's just like, it's not the market condition right now. If it happens, that'll be quite surprising. But currently, that's not what we're expecting from the market. So, you know, you can get a nice push, but we still gotta hit our head here by this ceiling. Boop. Now it's gonna set up again. You see, you got like a new resistance being formed right over here. So now this now becomes a no trade zone. Damn, Daniel. But the problem with funded program is no news trading and other restrictions. So you have to trade with the same rules with a 500 convert to 1,000 in 3 months. Yeah, I mean, you know, no news trading. Why would you even want to trade news? They're doing you a favor over there by telling you that you can't trade news. Because why would you want to trade news? What, you can't be profitable without getting these crazy pushes? Is that what you're trying to say? Because, you know, news is 50-50, right? News is gambling. And you can't control risk on news. Because, you know, the slippage might have a 50, maybe you're going to put yourself a 20 pip stop loss. Price moves up 100 pips in one 1 minute candlestick. Trading funded messes with your head because it's not really your money. Yeah, one piece of advice I'll give you is it's never your money until it's in your bank account. So whatever money that you see maybe on your broker, even if it's not a funded account, it's not your money until it's in your bank account. Because, you know, life happens and shit happens. So it's a very good rule for you to understand, because, you know, because if you start like spending, you know, it always comes back to financial literacy. This is the same way in real life. If you start spending money before you actually have it, then you can find yourself in a very sticky spot. It's never your money. So for example, what I typically like to do, let's say if I have $100,000, right? What I'm going to do is I'm going to put like 50% of that into my account, and then trade it as if I'm trading the full $100,000. So I'm still going to use the same risk percentage, but it's an additional layer of protecting my money. So I can keep half of it like an insurance in my bank and the other half as an investment. So worst case scenario, you know, worst case scenario, you're going to lose like a half. You know, that's a pretty low probability that that's going to happen. But, you know, it's still a probability. So I think what it does also for your psychology is it gives you like a peace of mind. You know, just the same way as having like an emergency fund. So putting half onto the side is like giving yourself an emergency fund. You know, it gives you some peace of mind. So you're going to trade. You know, a lot of these things, they're going to be solved with a stress-free analysis. You know, when you have like a good budgeting plan, you're giving yourself a peace of mind. That's what it is. That's all, the whole idea behind that. When you have good risk management and trading, you're giving yourself a peace of mind. And let me tell you something, like that peace of mind, the studies which show that employees who got paid more were performing better because they had the peace of mind, you know. But you got an employee who's not performing well, and you know they're trying to make ends meet and they're not good at budgeting and taking care of their finances. They don't perform as good as somebody who does. This is really good, like banking industry. If you're in the banking industry or like in finance, man, you know, you kind of like trust that your employees kind of have these systems for themselves. And it's a very good habit, you know. It's a very good habit. Unfortunately, it's not taught a lot. If I run a business, sometimes I wish I run a business. If I run a business, I would take employees to these budgeting seminars. We would have our own internal budgeting templates they can use, because, you know, employees are like, they're like your capital. They provide you a lot of value to the company. So when you're buying like Elon Musk, if you're buying Tesla stock, or you're buying Chipotle or what have you, you're investing more in the people than just the ticker over there. You know, that's what creates good companies. You gotta take care of your people, got a good leadership, and you know, you're heading in the right direction. So if you take care of your trading, if you make it as stress-free as possible, give yourself that peace of mind, you will grow. You will grow quite exponentially, because it will take a load off your chest or your shoulders. You know, when you have like a plan, you know, you're just following it. So you don't have to like always second guess yourself or worry that you're falling off of track. You know, sometimes I wonder like how people live their lives without having structure, because that structure, man, it's super important. It's so important. It will make your worst days your best days. I mean, it will make your worst days better days than your enemy. That's how I like to look at it. The more structured you are, even on your worst day, you're still performing. Remember, progress is progress, no matter how small. But at least have that. At least you're hitting the key marks, correct? Whatever it is, you're hitting that key mark. Remember we talked about video games? When you hit the guy's head, you get like 500 points. But if you hit his body, maybe you get like 100 points. So if you're structured, you can at least see where you're hitting. But if you're not structured, how do you know where you're hitting? Like every day could be, you know, it's like a hit and miss. Just like the same way when you take a trade, every trade is like a hit and miss. How do you know what you're truly hitting? Are you getting lucky? Is there a plan? Can you measure that? Man, these are questions, really important questions. But we don't like asking ourselves these questions. We only like to ask buy or sell. You know, some of us. Shit, I'm still in a loss. If you're still in a loss, man, and you're at that break-even stage, the only thing you can do is look at your losses and see how you can reduce those losses even more. That's how you're going to get out of break-even stage. How can you reduce those losses more? Man, this thing's accumulating here. Beautiful little accumulation. Getting ready for the next pop soon. It's gearing up. Hey, Moens. Good morning. The turtle traders sure made money on gold at the end of August. That man rally check Monday for Vic. Yes, sir. I think it's good, you know, it's a pretty good way to start off the week over here, because now it's like giving everybody like a food for thought. You know, food for thought, even just more than just the trades that they're planning on taking this week. Because I want you all to level up, you know. Life is all a game of elevation. So they say if you want to go fast, you go alone. If you want to go far, you go with people. Reality check Monday. Oh, we should call it reality check Mondays. Freaky Fridays, reality check Mondays. The right people? Yes, sir. That's a 1%, man. 1% knowledge. Giving on the stream the 1% knowledge. So trust me, it's all this that I've spoken about. It's very important. It's very important. Like that foundational thing that I even spoke about, how you can budget your finances. Trust me, it's very important. I can't even tell you my mindset when I had like 6 months worth of savings. Like that changed my whole approach to trading. When you got like 6 months worth of savings, man, I was more patient. I was more disciplined. I didn't rush entries. I would say that's one thing that's changed with my trading in the past few years, is that I've become less impulsive. You know, I've become more conservative. Because, you know, I'm giving myself like that peace of mind. I'm working towards giving myself peace of mind. So, you know, I gave you here today on stream invaluable knowledge. What you're walking away here with today is very powerful. But you know, the problem is some of you guys just sleeping on these skills which could make you into millionaires. You know, it's a bad habit that you have. You know, you have these amazing opportunities, you know, even beyond trading, but you're just sleeping on these skills. You're sleeping on them. You know, the information is out there. That's why Warren Buffett knew by the time he was in his 30s, man, we're going to be a millionaire. And by the time he hit his 30s, because he understood financial concepts like compound interest, you know, like compounding, sorry. So like the most simplest things also can have the biggest effect on your life. Like you just have to take control. You just have to start doing that thing that you don't want to do. Always be cynical. Always be cynical. Remember, we're here to move correct. We're not here to move fast. You know, I don't offer get rich quick schemes. Trading is not a get rich quick scheme. It's a get rich slow scheme. But get rich slow schemes are a lot more consistent than get rich quick schemes. So you got to choose a path. What path do you want to go in life? You always got to make a decision. And no one path is right, more right than the other path. If you want to make a lot of money in trading and you want to spend that money, you're going to spend all your money, you're not going to budget. That's okay. That's okay, you know. Like everybody has their own path and no one path is more correct than the other path. So you got like this guy here, he's going to spend his money. He's going to buy supercars and he's going to live it big, you know, he's going to live it big. And then this other guy, he's going to take more of a conservative approach. And he's gonna save his money and he doesn't mind saving his money, you know. So each one of these two are correct. So it just depends on which kind of like character that you have. But you know, you gotta do it with some kind of conscious thinking of, you know, what you're still doing, correct? So I think that is still okay. So if you want to make money in trading and you're gonna spend that money, you know, that's fine. I see a lot of people do that. And I know everyone in this chat is going to get to that point. If some of you are not yet at that point, you know, some of you are already at that point. And just so you know, like whatever decisions you make, that's totally up to you. As long as you're doing it consciously, you know. That's the most important thing, because a lot of the time it's easy to operate on autopilot. And then that's when you're going to realize later on that you were off course by a few degrees. So remember we talked about the plane flying to the UK as opposed to the US. So as long as you know what you're doing, then that's fine. Because you don't want to get here and realize that you've been moving incorrectly. That now you want to jump over onto this section. Because it's gonna be too late. You know, it's the same thing like if you're an entrepreneur and you're not putting something aside for pension, because you're not working, then you wouldn't get a pension. You gotta realize this maybe when you're in your 60s and you're like, oh damn. I wish I planned myself better. You see, but like the plane was off degree by just a few degrees, but with the right amount of years, you know, those few degrees, they're going to make a whole different country. You're going to go to a whole different continent. So as long as you're doing everything consciously and you know what you're doing, then, you know, I think it's fine. This is not financial advice, by the way. All this for educational purposes. Trade is the easiest way to make money. And hardest way to make easy money. Trade is the easiest way to make money and the hardest way to make easy money. Yeah, trading is pretty hard. It's the hardest way to make easy money. Really need to walk the dogs. The 1 minute looking so good. Man, Ricardo's like power walking these dogs. Every time you say that, you're back in like 5 minutes. Need to walk the dogs. Then you're already back. Yeah, we want that distribution. Yeah, it's gearing up here. It's gearing up for another distribution soon. Like maybe breaks below the support or breaks above that wick high. Ricardo, professional dog walker. Man, professional dog walkers actually make some good money, right? How much does professional dog walker earn in the US? Okay, so what is that? Between $36 to $54 an hour. How long do you walk your dogs for? People in the chat. What's the standard duration of a dog walk? Maybe an hour? Yeah, that sounds pretty legit. Like 1 hour. 1 hour. And what if you have, let's say, how many clients? Let's say you earn at the top range. How many clients can you do? So 1 hour in a day. Say you do like trying to imagine. Okay, go to client's house to do. Let's say you do like 4. Let's say you do like 4. $200. Like $200 a day. Let's say you grind it, let's say 6 days a week. No, you can't do 6. Let's do 5 days. It's $1,000 a day in a month, you know, like $4,000 in a year. It's about, you know, like 51 grand. I think an average American maybe makes around $30,000 a year. There's some studies which say $70,000, but I don't think that's the case. I think it's more true to like $30,000 a year. 30 plus. You'll be getting 3,000 steps in. Oh, what's that? 30,000. Yeah. Oh man, your legs are gonna kill you, eh? And like 10,000 steps a day is almost impossible to do. Yeah, I can't do it. Yeah, I think price will start distributing sometime soon here. The ones you see right now, it's at a point A again. It's currently sitting at a point A, so you got nothing right now. It's waiting on a distribution. So if there's gonna be a move, it's coming out of this zone right over here. So just the same way as we've been talking about all these other moves, you know. So it's nothing different. It's still the same idea here. Whether price, like, you know, maybe breaks above resistance, moves up, or breaks below support, moves down. So this would be kind of like the third trade idea for the stream. But we are currently at a point A right now. So it just needs to set up. Husky saddle it. Yeah, just wear those Heelys. Remember those Heelys? Those Heely shoes. Waiting for a long. I think it depends what direction the market wants to go. You know, it can move up, it can move down. Right now, there's no bias. It's mixed bias. The daily is literally a doji right now. So you're starting to get a lot of choppiness here. I think more of a sell as it's the top of the range. Yeah, I mean, the sell would be much nicer because it's at the top of the range. I agree with that too. It would look nicer for a sell because price already tried to move up here. You know, moved up, it distributed, you know, it paid out the buyers and then came back down. So I think with that rejection and that liquidity grab, we got like a little small liquidity grab situation just happened. You know, then price came down. It can maybe do this and then break below. It would look a lot much better because now we're rejecting PA on the left-hand side. There's a lot more clean range for price to also come down here than there is for price to move up. So yeah, definitely. I agree. Two to 3 days will not trading. My internet provider have problem in my area. Should get a second internet provider in the future. Oh yeah, you should get the Starlink. It's cheaper and I think it's more reliable. Is a work in progress. What is, man, I love Elon Musk. I love billionaires because they never show you that they have money. It's the best thing. Look at this, no watch. This guy's wearing a shirt which just looks like a plain old shirt. Man, this is what it means to truly understand money, you know? When you start focusing on money and you start actively growing and trying to get better at the field and the craft of managing money, you get a respect for money that feels different. Just the same way as once you start giving money per month to, like, let's say a charity of sorts, and once you start doing that, you know, for you right now it might seem like, you know, why are you gonna give your money away, you know? But like once you start doing that too, you start to realize, you start to get a different feeling about what money is. And you know, it's the same thing as investing in yourself. Once you start investing in yourself, it becomes addictive. You know, just the same way for some people, it's almost like addictive to give money away. It becomes addictive to always want to give money away. You know, when I leave the house, I leave the house with like a few notes, you know, like some change. I can give my guard. I gotta give my guard a few notes. When I go somewhere, somebody helps me out, you know, I'm gonna give this guy a few notes. It becomes addictive, you know, because now your relationship with money is changing. It's no longer from a point of survival, but when you start giving, man, you're gonna get back tenfold. The universe is gonna give you back tenfold. You know what I mean? Like before I started live streaming, I was like, man, why do I even want to teach people? Why do I want to share my strategy like this? Why do I need to do this? You know, I didn't understand. And then when I started live streaming, when I started like being more transparent, explaining to you guys the setups, like the universe, it just acts in these mysterious ways where it's like everything good is always hidden on the other side. So I started realizing, man, this is actually amazing. You know, this is awesome. Like it's helping me with discipline. I can get like an extra side income from this as well. You know, it can pay my commissions. It can pay like certain expenses. I was like, wow, this is actually pretty good. We can form a nice community here. You know, because like trading is a lonely game. You know, if you're going to trade alone, it's quite a lonely game. You don't have anything else to do once you take your trades. So you see, it's all a mindset shift. You got to respect money and also be indifferent from it. And then the universe is going to open up doors. It's going to open up doors. But you got to be willing to take those first steps. You know, no one's going to take those steps for you. No one's coming to save you. So you got to figure it out. You got to figure it out. Take those first steps, those leaps of faith that you need to take. And you never really regret it because you always learn something from it. You know, the worst thing to do is not to do anything. Because when you don't do anything, you don't learn. Absolutely nothing. Like you're stagnant. You don't learn. You know, it's the same thing as money. If you just leave money like this and you don't know how to manage your funds, you know, it depreciates. The universe doesn't like stagnation. When you have stagnant water, you know, stagnant water is also not good. Stagnant water can start to deteriorate, you know, but if it's a flow of water and flow is moving, it's much cleaner. Just the same way as your bodies, you know, you got to move your bodies and everything. So everything is always in motion. So don't get stuck. Take that trade. Whenever you feel like you're hesitating on a trade and you're still building a system, take that trade. Trust me, you're going to learn something from it. It's better you take that loss and you're going to learn a lesson from it than not to do anything at all. Because you know what we do? A lot of the time what we do is like, we take a trade and then we forget about it. You know, it's a pretty bad habit. When you're still building a system, you're going to take a trade and then you forget about it. And then it's kind of like a depressing way of trading because, you know, then you're going to think, okay, you know, that was a losing trade. So I took a losing trade today. And then nothing comes out of that losing trade. But if you take a trade and you start learning from that position almost immediately, man, that's the secret right there. Any progress is any progress is progress. Any small progress is progress. Every day it builds up. So right now, you know, price is just waiting. We're waiting to start to move here. Gonna break through this zone and, you know, maybe we're gonna distribute upwards or maybe we're gonna move down. But this is the next probability of a trade that's about to come in here. Also, some pretty nice range on the left hand side too, up towards like 36.45. Nice accent. Thank you, Rora. Hey chat, what accent do you think I have, by the way? It's actually quite interesting. What accent do you think you guys like when you hear me? What does it sound like? Does it just sound normal? Like just neutral? Does it sound, how does it sound? Because I try to speak clearly. I don't, Essex. Damn. Really? Yeah, I was meant to go to Essex. I applied to University of Essex. Essex, I got denied. They said you got bad grades. They said we don't allow degenerates into this university, sir. Go work on your grades. Then I had to go and do a foundation year. I went to do a foundation year because but you know, that was a blessing in disguise. Essex rejecting me was a blessing in disguise because, you know, I got to go to a country which had like sunny weather all the time and an ocean. It was a blessing in disguise. You know, the universe works in these funny, funny ways. So, you know, whenever you think you're going through a hard time, don't take that as you're struggling. Take that as a directional, like a compass. Like God is giving you compass direction. So you just got to listen to it and trust it. Trust the process. Don't try fight the compass. Trust in the process. Don't try fight it. It's like fighting the ocean, you know, like, or fighting a river that's going in one direction. Because God is trying to push you. He's trying to say, like, this is the river. You have to just be free. Just trust in me. I'll get you to where you need to go. Because you see, here's the thing. Maybe you're trying to get up here, but you don't know that this river, you think you're going downstream. But in reality, man, this river might be creating some miracles for you. You know, just around that bend could be giving you everything that you wanted. But you're over here trying to fight against the tide, holding onto this rock. You know, trying to think that everything is going against you, but everything could just be going for you. Everything could just be setting up for you. So you just gotta let go. Let go of that rock, and then the river is just gonna do its magic, you know. Let God take the wheel. Let God take the wheel. Let him get you to your destination. Don't try and fight the current. You know, you can't fight. When life happens, you know, most of the time, just try and be as flexible as possible. So this is more to do with trading though. So be as flexible as possible when those losses do come in. And I think a good thing about this stream is we also emphasize a lot about losing, correct? You don't hear me always talk about winning because majority people are still in the learning phases. Indian? No ways, bro. Take that back. Sounds soft essay to me. You definitely don't have a Kenyan accent. Canadian? Yeah, I don't got a Kenyan accent. Sometimes I do. Canadian, kidding bro. South African. South African or the mix of American? Oh, interesting. I don't sound like an Indian, my friend. Please take that back. Thank you. Come again. No, joke. I love my Indians in the chat. Shout out to my Indians in the chat. I can definitely hear UK/London accent. All right, chat. So this thing's about to... I feel like Goldie's about to melt, to be honest. Would you not take it as accumulation breakout and not wait for close? More of an impulsive entry? Oh, this? Man, I would take this if it was like pre-London, pre-New York. Pre-New York. I set myself a few rules here for the London session. I wanted to see more like a trending market conditions. This year was one of the key adjustments. You know, like every year I'm making some kind of like adjustments. Maybe even every second quarter. But this year we had to do a few adjustments, but definitely this waiting for the trend thing has been quite important because I think the market has been like very directional of sorts this year. So if it's not trending, we've been seeing a lot of consolidation throughout the London session. So that's why I was just like monitoring on like doing a lot of paper trades here until I see something that's really good. But you know, this also looks really nice, man. If this was pre-New York, pre-London, I'll be executing on the break of the lows here by 36.40. Expecting price to continue to move down. Move down to fill some of this range on the left-hand side. So yeah, I'll take it like as an accumulation break. Instead, but you know, candle's about to close here in about 40 seconds. You could also just wait. But yeah. So it's like good. It's not moving right now, so that's good. Okay, now it's moving. You might as well just take it. 30 seconds. So yeah, that would be the third trade idea. So far, I think like most of them just been playing out here. I'm still kind of sitting on my hands. This is the first time I'm looking at the charts with you guys since like Thursday. On Friday I couldn't look at the charts because I had some kind of commitments, so I couldn't trade on Friday. Oh, nice. Candle broke below support by 36.41 there. It's breaking, but it doesn't have a top wick, but I think it's playing through this little accumulation that's currently formed over there. I can determine the accent, but it's cute. It's cute. Just blew my effing account. Oh, Ricky. What's up, Ricky? Always blowing an account. I see nothing has changed. So it's still the same old, same old. You know, Einstein says insanity is doing the same thing over and over again, expecting a different result. So you gotta change something there, Ricky. Blessed K, thank you for the sub. You got an unnatural affiliation to losses that's unlike you. What does that thing Cat Williams says? Like, you know, some people they're addicted to losing. It's almost like they want to lose. You know, it usually happens like this in trading. Let me show you exactly how it's going to happen. So when you come onto the charts, yeah, and you have like, okay, so you know you got one setup over here, and then you watch that setup play and you're like, damn, I didn't take it. Then you got another setup over here that we talk about, and then you watch it play out, then you're like, damn, I didn't take it. But now the confidence meter is all the way up here. So the third trade, you're definitely gonna take that one, even if it's not as a good an entry as the previous two. But because now your confidence levels are so high, you're definitely gonna take that next one, you know. And then that's what happens usually. Then you're gonna take the third one, then it's like a losing trade. And it's like a bad habit, you know. We have these habits of just watching the profitable trades play out and then executing on the risky trades. Or something like, you know, you might see a risky trade always play out and you're like, I don't want to take risky trades. You know, it's not part of my plan to take risky trades. But trust me, the day you take that trade is the day that risky trade loses. You know, so you're kind of like out of rhythm. You're out of sync with the market. Leave a 1 if that's happened to you guys. The day you take the trade that you're not meant to take it is the day the trade loses. You're going to watch something play out so many times. The moment you take it is now it's going to be like a losing trade. So you kind of sometimes have this habit that like you want to lose, you know, it's kind of like a psychological thing. Man, I used to have it as well. I used to always almost want to lose, you know. It's like I was allergic to winning trades. And it happens when your morale levels are pretty low. You know, that's typically when that comes and gets you. And it's like you spiral. Basically, it's like a spiral. It's a slow spiral, but it builds up quite quickly once it gains momentum. Once you start actually executing, that's when the spiral starts to gain momentum. And then you're like, oh, damn. Another account blown. Damn. Damn, Ricky, you said you're going to follow your rules this time. But you can't, because, you know, you can't control your emotions. You can't control emotions. If I'm not trade, I buy a car, I can buy 2 now. Oh, imagine that, Ricky. Imagine that. Why do you do this to yourself? You know, why do you do this to yourself? Who told you that you gotta lose so much money? I lost so much. I took so many L's, but I would only lose in a day, maybe, you know, like 20 bucks. I would keep my risk very, very low, that it was almost impossible for me to truly blow an account. You know, because you gotta make the, you know, the thing about life, everything is pulling you, everything is pulling money away from you. So all the money you got in your bank account, you gotta find marketing companies, you know, telling you need this, and you gotta fight like all these expenses. So everything in life is designed to pull money away from you. So you gotta fight back. You gotta fight back and say, if the market is designed to pull money away from me, from my trading account, what can I do to make it as hard as possible for the market to take my money? You know, just like in real life, you gotta start budgeting. You gotta start looking at your money. In trading, you gotta start managing your risk. You know, make it impossible, almost impossible for the market to take your money away. Because you don't have to have those big tuition fees. You don't have to have those big expenses in the market. It's more controllable here than it is in real life. Because, you know, the market doesn't give you like sudden surprises necessarily where it's like, oh, now you got to fork up like 20-30% of your net worth, you know, because so-and-so got sick. Just as an example, you know. Here you can just keep it low. You can keep your risk more controlled. So you just gotta put yourself like in the right mindset. Ricky. That's all you gotta do. That's all you gotta do. Because you don't have a problem making money. You're making the money from somewhere. You got a salary if you could spend enough money to buy 2 cars that you've blown in the market. So you don't have a problem making the money. You just have a problem keeping and growing the money because you haven't learned how to invest yet. By the way, none of this is investment advice, just a small disclaimer. Looks like we got a little bit of a fake out situation that happened here too. Give yourself like a buffer once you're profitable. Give yourself a buffer on that funding account. Whether that's going to be like 5%, 10%. That's like your insurance basically. Worst case scenario, you're still going to be okay. Then make weekly withdrawal. Weekly withdrawals from your fundeds into your personal accounts. Because the thing is, if that money is not in your account, it's not your money. Always remember that. Man, what a fake out. Holy. Things push out like 14 pips over here. Oh, wow. Look at this. So it looks like there was just a probability of this trade here becoming a fake out, becoming a losing trade. So we got accumulation, manipulation. This was a real move. So, you know, like the idea here was anyway, at the end of the day, was price was going to move from this area. This was a point A, and now you're getting the movement from the point A. So, you know, at the end of the day, you're going to look at it and say, okay, you know, it's a losing trade. Maybe you manage your risk. But at least you're still in the right place, right? You're still in the right place because this is where you need to be. You need to be in these areas where you're getting these distributions. That's where you, because everybody, each one of us is trying to catch this move, right? We're all trying to catch these distributions. So at least you're in the right place. You're where the 1%, where the 1%, even the 1% lose money. Don't get it twisted, right? You're sitting at the same table now. You know, at least you're all in the same table. Some people are going to make money. Some people are going to lose money. But in the long run, if you keep showing up at this table, you know, everyone's going to be eating quite nicely over there. That's how like businesses work. You know, so you just want to be at the right table. So I think, you know, it's pretty nice over here. So we had one buy idea, filled up the range beautifully. We had another buy idea over here, which I think the explanation for this buy was gold. Man, like I don't think you're ever gonna get a explanation that good again. Like in terms of understanding how resistances are operating here when candlesticks fill ranges. I think that was a really good example. And then you see how price moved up, and then now we got another point A over here, but this now was a fakie to the down. Even if the downside looked good, imagine this, the market can still do what it wants. You know, it looked a lot cleaner to move down, but it still moved up, even despite all these resistance points right over here. It still moved up because it's an accumulation break, which has loads of volume inside of it. I was waiting for this type of movement down. Once I see candles print different, I close it, reduce my risk 60%. Oh, revenge that shit? No way. All right. All right. Revenge that shit. Yeah, you know the thing about giving a trade a second chance. Let me guys tell you that whole idea behind giving a trade a second chance. You know, the idea here is that if you take a trade once and that's a losing trade, the second time should play out. And if the second time doesn't play out, that just means your analysis was wrong. You know, that's the whole idea behind giving a trade a second chance. So by the time you're giving a trade a second chance, you're going to know whether your analysis was truly correct or incorrect. So you see in this situation here is a fake out. So if you didn't take a sell, I would, for example, let's say, you know, sometimes I see market do something like this. I'm like, okay, you know, there's a little bit of a fake out here. I already start preparing for potential buys if the lows don't get rebroken, because I know the scenario happens as well, that you can get the opposite side of the trade, which would be like almost equivalent to the second chance, and then take that as a winning trade, but that would be your first chance. You know, so you're kind of looking back and thinking like what price has previously done, because when you first get onto the charts, sometimes the market is already set up for you to take a trade. So you have those kind of like confluences like this. And so much volume came out of that too. Revenge that shit.
Bomba.
Yeah, I think so what does Cat Williams say again? What is that? Let's see.
You having an unnatural allegiance to losers is not like you.
You have an unnatural allegiance to losers that's unlike you. Yeah, he said it best right there, Ricky. Yeah, so let's see what the first trade for this week here is gonna be like. Kind of week that we can get here, but the good thing is that I see the way I see price right now is like price is moving. You know, we got from the Asia Open up till now, like we're getting beautiful distributions. Like people already caught some pretty nice trades over here this morning. Yeah, pretty decent sell-off on that clean range, and you know, then we had the buys. Here's another sell. Strong sell idea. Too many rejections to go higher. Good RR to fill the range. Yeah, awesome. Very nice. So that's what we've had today. We're having definitely some decent movement, some decent flow of PA. Looks pretty good. No complaints from me so far. The only thing is just daily is just not going anywhere. That daily is up 0.08%. Only 0.08%. You know, that's the only thing. But besides from that, you know, it looks good. It looks like a good day. We could probably get some nice trades in here today somehow. But obviously keeping in mind the overall consolidation that we have on the daily. Oh, wait, the daily flip? Yeah, the daily flip, man. Look at the daily flip. It just took out these lows. It's a bit elusive because, you know, I mean, it's a bit like tricky because we don't actually expect price to move before FOMC on Wednesday. So we might just hold these highs. All-time highs over here. I don't necessarily see us breaking out already. That would be quite interesting because this is a point A right now. Because what's going to happen is when you look back at this in hindsight, let's say at the end of the week, what you'll probably be looking at, there's a higher probability you're going to be looking at something of the sort like this when this week ends. And then it's going to be coming out of this zone. So that will be the point A. That's going to be the distribution. So you might even already see people already in buys expecting the FOMC to drive this thing up bullish. But that's what you'll be expecting. Similar scenario like what you see here on gold on the 1 minute. Boom, boom, boom. Sideways and then breaks above. So we just gotta wait and see. You know what the hardest part about trading is? Is just the waiting. That's only the hardest part. Like everything else, you know, is pretty easy. I think it's... Everything else is pretty easy because, you know, like when you take one trade today, you know, you have to wait. Let's say if you're taking 2 trades in a day and you're taking your second trade, you know, you have to wait a whole 24 hours, right? Till you can trade again. So it's that period of doing nothing that feels a bit awkward. What if Powell makes a roundhouse kick and doesn't cut rates? Bro, I think at that point we should all just go onto Powell's Instagram or Twitter and send some nice messages. That's what we gotta do. How long do you wait for the next trade? Per session. Pre-London, London, and pre-New York. That's it. Gold prices stable near record as bullion bulls gear up for Fed rate cut. Gold prices stay well bid. Traders await Fed decision. Beware of the flip side in gold. Let's see what the flip side is. Happy Fed week to all gold bugs who celebrate this huge event. Now, if they could only get to witness the first rate cut this year. Man, you know, we gotta have a moment of silence for all the accounts that didn't make it this far into the year, or made it this far into the story mode. Let's all just have a quick moment of silence for all our fallen soldiers here. Okay, awesome. Quick moment of silence. You're gonna pay our respects to the overtraders, the over-riskers who didn't make it to witness this glorious boss fight that we're about to have. You know, it's like when you play Dark Souls games. You know, play a Dark Souls game and you die too early, then you're like, man, now I gotta watch these guys. I gotta watch these guys have all the fun until we get to the next checkpoint, you know? So now we're going into the boss fight. The boss fight's gonna be Powell. So we're gonna fight Powell and you're just gonna watch. But you know, the good thing about that is next time when you come back into the game, you're gonna come on with a chip on your shoulder. You know, you're gonna come in like ready to survive the long run. So, you know, that's the whole thing. That's the whole thing. You're just getting better and better at getting further and further into the story game. Story mode. But anyway, let's see. Gold was trading flat to slightly lower early Monday with prices hovering near 36.45 per ounce. Oh, man. Yeah, it's a big week and some consolidation can be expected as traders brace for perhaps the biggest... Sorry, I can't take it seriously. I was just remembering like a few weeks ago I was playing Remnant. It's like a Souls game with my brother and he died quite early, so he had to watch me the whole time. And it's quite fun when somebody watches you. It's just like playing the game. Oh, man. All right. On Wednesday, central bank boss. Oh, look at this. Central bank boss. I told you, man. This is floor level boss here. Jay Powell will pull up to the podium and say what the Fed's doing to steer the economy in the right direction. More precisely, are officials in sync for the first interest rate cut this year? And are there more coming by the end of the year? Yeah, those interest rate cuts, those are going to be like the bombs he's going to drop, Powell. The consensus view of fully priced 25 basis point cut to 4.25% if materialized, a reduction to borrowing costs will alleviate some of the strain on the economy, potentially help sustain gold's upside swing. But, and yes, there's but. Yeah, this is what I want to get to. Why the pump? Gold has been going vertical for weeks since August 20th. Bullion has added more than 10% to its valuation. It's an unusual sharp rise given the metal's fairly conservative nature, away from wild volatility and big jumps. Wild. So why is that? The prospects of interest rates are pushing gold prices higher because a lower rate environment reduces the opportunity cost of gold. In other words, it gives more attractive when fixed income assets yield less. Let's see, what's this buy the rumor? Let's see. Now let's get back to the flip side. Yes, this is what I want to know. Gold's aggressive climb over the past month may suggest that traders have already baked in rate cut. Yes, sir. That said, beware of the classic market adage. Buy the rumor, sell the news. Yeah, people already been in this market, but I think it has legs to move up though. Why not? Why wouldn't we see 4,000, you know? Why not? If markets indeed get a rate drop, they may call it a day and take profits, potentially causing the price of gold to drop. But no matter the outcome of that big meeting, expect volatility to sweep the markets all around. Whips all around. From gold to stocks to crypto and forex. Get your stops ready. Get those stops ready. and watch for those trading opportunities. What else can move gold this week? Retail sales on Tuesday could be a catalyst and potential precursor to Wednesday's interest rate decision. Oh, very nice. Yeah, we're going to expect some real volatility. But I think, you know, as experienced surfers, we're going to be all right. Right, guys? We're all experienced surfers in here. I think we're all going to be okay. We're all going to be just fine come Wednesday onwards. But actually, it starts from now because, you know, it could start getting a bit whiplashy from this point onwards. You know, but so far, Monday does seem pretty decent. It seems clean to me. It's always risky, right? It's always risky until you know what you're doing. And then it's just like any other day. You know, the XI looks like it's already getting ready to tumble as well here. Nice little break and retest off that. Yeah, I think GJ is going to also get some volatility here with the FOMC because, you know, it's the dollar is affecting the yen over there. So we're going to expect some kind of like reactions. You know, it's just the same with like core CPI. You see core CPI sometimes it can have like an effect on pound yen because of the yen over there, the yen and the dollar. Although it's not directly tied into this instrument. Final boss, let's get it. Yeah, this is exactly the final boss if you think about it. We're so far into the year, we're getting into Q4. This is literally the final boss. This is the guy in Mortal Kombat. When you get to the top of the mountain over there, this is the last fight. This is the last stretch. Double XP quarter over here. This last quarter is a double XP event. Everything you do counts as 2. Man, I used to love this game. Man, this game was so hard. Climbing up that mountain like the old Mortal Kombats. So difficult. So difficult over there. I was short on XAU and fake out. Is Q4 the hardest to trade? Oh no, it's going to be... you can't say Q4 is Q4 the hardest to trade, you know, that doesn't make sense because everything, sometimes people think like December because of all the holidays and stuff, it can be difficult, but look at this. This was in 2023. My December was one of my best months. And I went so hard on December. I took about let me see if this calculates for me. I took like 31 trades in December. 31 trades. This is like, you know, we just started live streaming during this time over here in like September. And then it was a pretty good month. You know, we only had 1, 2, 3, 4, 5, 6 losses that whole month. So you'll be surprised. You will be surprised by how your months can flip. But so far for me on average, I would say the summer months are what kind of like is always low percentage gains. You know, I made like 13% in June for some reason. But for the rest of the year, you're going to be surprised. Like for me, for example, I didn't expect freaking July to be this good. You know, we had like 51% in July. Like, that was amazing. There was so much volume. There was even times the market was being repetitive. Remember this time here? Like, look at this. This was a buy that I took at 710 and then another buy I took at 710, and I'm like, damn, the market is too repetitive, it's too easy. Took another buy here on my third trade. I'm like, I'm gonna hold this trade. Made like 6%. You know, because that whole month, the way the candlesticks were printing and the way like price action was flowing was like much more easier to read. So, you know, you just got to show up. A lot of it is just showing up because, you know, you can't speculate which month is going to be the good month. You know, but the more you show up, the luckier you get. So, you know, just like today, I still showed up to the charts. I'm not expecting much, but we might still be able to catch a move today. You just got to put in the work, show up, and the universe is going to give you what you deserve. That's the way I like to look at things. So long as you put yourself in that position to actually get splashed. You know, majority of the time, like making money is all about putting yourself in a position where you get splashed, correct? Because if you got a business, right? If you got a business, let's say you're selling hot dogs on the street, right? You're selling hot dogs and you know, this location here, at a certain time, you're going to have a lot of people walking past this direction. You're going to have a lot of traffic, correct? You're going to have a lot of traffic here because, you know, maybe the bus stop is right here. Maybe the bus is coming back from the city center. So people get off the bus on their way back home. So you're going to have like a lot of traffic. So you're going to get splashed. You're going to splash. But, you know, if you're on this side, no bus stops, nothing like that. You just get the casual walker. How do you expect to get splashed? You know, a lot of us sometimes we're on this side of the fence. You know, how are you gonna get splashed on this side of the fence? So you always gotta think and watch what people are doing, and then you're gonna see, oh, this guy's making a lot of money. All right, so what his strategy? What does he do? And then the next day you're going to replicate that, and then you're gonna be on that side. Correct? Now you're the guy selling the hot dog on like a similar strategy. Doesn't have to be the same spot, but you know, similar strategy. Then you get splashed. Isn't that how we all get profitable? That's how every single one of us here are getting profitable. That's how I got profitable. That's how you got profitable. Was by watching other people getting splashed. They were like, okay, let me try this. Let me try this. And then you got to try it and you'll be surprised. You know, but if you're too ignorant or sorry, like arrogant, then you never want to be willing to learn what this guy is doing because maybe you don't like his hot dogs. Maybe you think your hot dogs are better than his. You know, so you deserve something. But life doesn't work like that. You know, you could have the best. That's why they say you could have the best product. But if you can't market it, no one is going to buy it. You know what I mean? So it's like, what are you trying to do here? Are you trying to be right or are you trying to make money? In trading, a lot of us are too focused on trying to be right. You know, we have to have these perfect entries and like, you know, the perfect risk to reward like this. We're too focused on being right than we are on actually making money. So we're focusing because for you, this looks like the best product, right? That looks like the best product right here. But maybe this other guy is doing this. Maybe this other guy over here is doing something like this. And, you know, is securing something every day. You know, is taking profits out the market. But for you, this makes more sense, correct? For you, this is what looks better. It looks better. It looks much more effective. But this other guy doesn't look that good. But why is this guy making money? You know, and you're still struggling. Even though you have the best product, you're like, man, this should work. You know, I got like 50% wins. I got a 1 to 2 risk to reward. I just need to be right 50% of the time. Sounds amazing. But why aren't you making any money from it? Because you're trying to be right. So it's all about finding that balance, you know. Because I'm going to take my trade. I'm going to take my trade and I'm not going to try to be right on my trade. I'm just going to try and make money and manage my risk. Because if I can consistently do that, then, you know, with the sample sizing, I see I can come out on top. So I don't need to be right. Maybe you got to be right if you're trading the overall direction of the market. The market is not your friend. Yes, sir. The market is like piggy bank. Piggy bank. Piggy bank. You know, you just want to be in and out. In and out, in and out. You don't want to be holding it too long. Don't get it twisted. The money you keep on your broker is not an investment. That is not an investment, the money you have in trading account. You know, and it's not most of these brokers might not even be, I think, FCID. I forgot the abbreviation. They might not even be insured. You know, those are the things that you also have to consider. There's always like an insurance in financial. Like some banks either have this insurance or they don't. I think it's called FCID. I can't really fully remember, but they insure you upwards of, I think, either $10,000 or $100,000, or $100,000, so like $10,000 to $100,000. So, you know, it's not an investment to have money in your broker. It's only your money when you withdraw that money. Is that if you're just trading for money, it's pointless because you'll be a lemming. Trade to be a better trader. Yes, sir. Trade to be a better person, a better you, a more disciplined you, a more patient you. And trading is, there's no place like trading to build that character. You know, so like leave a like on the stream if, you know, the stream helped you like remain patient. Because sometimes that's just what you need, is just to be patient. It's just to like get comfortable being patient. Because, you know, you don't have to catch all the moves. And trust me, like there's so many moves in the market, you can't catch them all. And you wouldn't lack. There's an abundance of moves. There's so much money in the market. There's an abundance of moves. You never lack that. You know, one thing about money is you never lack money. Like, you know, money comes and goes. That's the thing about money. It just comes and goes. There's an abundance of that. You know? So if you haven't yet taken a trade here today, don't worry about it. I think the next volume time is going to be coming in about 40 minutes. That's going to be from that next hourly candlestick that opens up. That's going to be that pre-New York. And then we're going to get a couple of pushes there as we head over to New York session. But the good thing here today is we don't have any fundamentals to worry about. So Monday is pretty clear. Still eyeing this level over here. You see the support by, it's like 36.40. We're still kind of like eyeing this level because price can look to correct this down towards this next support, which is like obviously by 34 area over here. See, now that's a range. So it looks like a fakie. Actually, it looks like a double fakie. Because, you know, there was that accumulation here first. Look what happened. It faked below it. Got some whips. And then broke the highs instead. Distributed. But at the same time, it faked out the highs. It faked out the buyers coming back into the range. So you're actually expecting if we start to break below the support, price should keep moving down this time. Because it could have just been a higher time frame fake out. But, you know, casualties on the LTF as well. But it could have just been a higher time frame fake out here to move down. Because we're all looking at the same thing, you know. Like we're all looking at these rejections by this left hand side. And we see how price is rejecting. So I think it was just the market's way of like kind of shaking out the sellers before it attempts to come down again. You watched Terrence fight? No. Was there a fight that happened over the weekend? I'm still trying to watch this Joe Rogan, Charlie Sheen podcast. Isn't Logan Paul supposed to be fighting someone soon as well? I thought I saw something like that. I have a sell stop at 36.40. Is that 36? Yeah, 36.40. Be right back, guys. Remember, drink more water, guys. It's your friendly TFX streamer reminding you to drink water. It's important. It helps with cognitive thinking. You ever try to get work done when you're dehydrated? You can't think properly. You know, at some point you just feel like your brain feels like a prune. And you can't think. It's important to drink water. One more, then I need to do some work. Oh, I love that. That trading doesn't feel like work for you. Yeah, I think do y'all feel like trading feel like work for you? Like, leave in the chat, does trading feel like work? Actually, I've never thought about it like that. Trading feel like work. Even right now with the live streaming, it doesn't necessarily feel like work. Yeah, it feels like work for you, Ellie. You gotta suit up. You gotta get ready. You gotta come into the charts. Time to go to work. But yeah, I think it makes sense for some people. You can feel like work. You can't feel like work. I mean, it is work. You got people who are actually employed in institutions. It's not like a hobby, you know. It is actually like work. But as a retail trader, it doesn't feel like work. Like, if you ever watch Billions, you know, when some of these guys get let off, when they get fired from Xauusd's hedge fund, they go home and they're still trading. You know, they're still trading, but it doesn't feel like work like when they're actually at in the building. It's more formal. For me, I just love it. Doesn't feel like work. That is why I do it on vacations also. Oh, nice. Yeah, for you, it's like fun. That's true. What you say, Woods? Yeah, I'm 1.5 hours into the Charlie Sheen 2. Winning. I win here and I win there. What did the reporter ask him? Are you pro something? Are you pro something? Pro LGBTQ or something like that? I think I can't remember. It says no, but I'm pro winning. I win here and I win there. Oh, man, Charlie Sheen is a legend. Legendary status, that guy. Because everyone nowadays is famous. You know, it's not that hard to be famous nowadays. There are a lot of famous people. But back in the day, man, there's a huge mystery around famous people like Charlie Sheen or Michael Jackson. It was huge. The amount of fame Michael Jackson had before the internet. People in the villages of Africa knew who Michael Jackson was. It was a whole different level of fame, you know. But nowadays you got like OnlyFans girls, models and stuff who have like millions of followers. So it's, you know, it's not the same. So yeah, it's pretty nice a podcast. I hit like, man, as soon as it came out without even watching it. Let's see how many views it's currently at. When I saw it, it just had like a few 100,000 views, maybe 1,000 likes. Let's see, go live. This is on 3.2 million. Oh, nice. Yeah, it's already doing pretty well. It's already much higher than his other podcasts are. Tiger Blood. If y'all don't know who Charlie Sheen is, you're too young to be my friend. If you don't know who Charlie Sheen is. Guys, awesome. Oh man, look at this. Now we're cleaning the range here on the left-hand side. And look at this. You got like 50 pips. You got a 50 pip range. And look at this. Nice. Shotgun play to the downside. So far, recap over here. What did we have? We had swing entry model, accumulation break, accumulation fake out, reversal, the buys played out, the sells got faked, and you got shotgun entry, close below support. That's 1, 2 wins, 1 loss, 3 wins. Awesome. Very nice. I feel good. So just watching over here. Just watching. So this to me, what this is to me doing, it's showing to me that there's a pretty good flow of orders. 2.5 men. Yes, sir. 2.5 men. I moved to London today. What's up, RV Productions? Hi, I'm back again with another question. I'm having a trade in I'm having trouble in identifying FVA. Please, can you explain for me, please? Oh, I have no idea what FVA. Oh, you mean FVG? Well, we don't trade FVGs, unfortunately, sir. We don't trade FVGs. Damn, I did take partials and moved SL, and now it's coming up. So what's the problem? Oh, you mean you mean no, it's good. You know, when you're securing something, every time you're securing something, you're doing it knowing what you're doing, right? You're not doing it based off the fact of, oh, you know, like you're expecting it to retrace back down, but you're just managing your trade like you should. So don't regret taking partials, even if price continues in your direction. Because let me see, what did you do? A counter trend, possibly even. Oh, you took a sell. Okay, you took a sell, you took partials. Okay, nice. Yeah, I think it's pretty good habit. But sometimes when I take my trades and I want to secure, let's say, $1,000, even sometimes it happens where price pulls down at that same exact moment, and I only make, like, let's say, you know, it can be bad, maybe even $700 or like $800 or something. You know, it's like, it's fine. It's just a variable. That also happens as well. You know, there are so many of these variables that the longer you're in the market, the more you realize these variables exist, and the more stoic your mindset becomes to those moments. You know, even remember, like, when we did our simulation, the last simulation, if you guys haven't watched it, watch it on the channel. Man, we had like a sell idea exactly like this, something like this, you know, and then we had two positions, and our runner got stopped out of break even because we had one sell like this and we had another sell like this. Then our runner got stopped out of break even, and then just price just completely knotted, you know, at that point. So it's a similar thing that could have happened to you over here, Ricardo, and I think it's totally normal. It's like part of the experience, if you will, the trading experience. So, you know, sometimes you're gonna think like, oh, did I mismanage my trade? Could I have done something differently? But, you know, sometimes it's also like it's just part of it. It's part of the process. How big was that retracement though? All the way up until here. Man, did that just get you out? Oh no, your entry was a bit higher up. If you still had a position on, no, your entry would have still survived that little pullback there on the 5 minute. Yeah, this thing's coming down. Explain on FVG, please.
We don't do that here.
What part of we don't do that here don't you understand? Huh? I can explain it to you, but I can't understand it for you, sir. I stick a sell here, expecting price to continue moving down. Nice. Oh, this looks like the TFX indicator for the shotgun play. So if you got the indicator, basically it also shows you the shotgun entry. I haven't used it in a while, but I actually want to start using it when I start executing on shotgun entries. But it will show you the stop loss placement. You gotta come on here and then you gotta go on XAUUSD. See, entry here, stop loss above here. Let's put it like 400 for 40 pips SL limit. You can set an SL limit for yourself. Let's see, sells below, boom, here, and then sell target. Let's say down over here. So that's your profit target. That's a sell target down there. Yeah, you could say like 20 pips. Let's say like 20 pips. TP1. It's gonna be here by 20 pips. Oh, we gotta change the entry. $36.38.12. I haven't used this thing in a while. Why is it saying 36.38.12 down there? Oh yeah, you see sell below here, sell target. Sell target down towards 36.34. Gets triggered. Boom. There you go. Triggers. Stop loss above that area. And then price came down. Let's remove that. Oh, okay. I see what I did here. This should be all the way up here. Sell below this support. Oh no, it should be this support. So once you break below that support, that's where the clean range is. So then this would be the entry confirmation candle. Oh, I see. I see what happened. Okay. So just need to get used to it again. But you see, broke below support here. By this is a 36.40, and then it kind of just marks it off for you. Oops. Let's turn on management and risk. Oh, but the TP, full TP. Where's the break even? TP/BE. So let's say how many pips from the entry from here comes down? Let's say 20 pips. Sell target. Yeah, there we go. Then you see this? Tell you to manage your risk here. So this is usually when it's about 13 pips in drawdown. I should tell you manage your risk here. If price starts to come up too heavy. Let's see these settings. Breathing 50. Oh no, it's 50%. Oh, okay. So it's 50% in drawdown. That's when it tells you manage your risk with, I think, an additional 1.3 pips. That's what that is. So in this scenario, I think it's pretty good. Lines up nicely with that wick right over there. This wick high. So if it breaks that wick high, then you can like close your trade. You can close trade, or you can close partial of your trade. It's kind of the same thing we're doing with the consolidation breakouts, but we're doing like 35% in drawdown. But all of that is customizable. They say hits TP1. It says TP1's here been hit. And then automatically puts the stop. We should put the stop to break even. Yeah, they see stop loss goes to break even here. Boom. TP1 checked. And it's still got this range on the left-hand side to continue filling up. So it's like a shotgun play. So all you got to do really, I just had to get used to it again, but you just have to draw the support levels. So if you're planning a sell, that will be from this support to this support. So it's showing you whether the key confirmations that you need to have for the shotgun play. So for example here, wick to breaks, WTB, true. So this candle, it's true. It has a wick to break. Because, you know, sometimes the wick's pretty small. You wouldn't see it. but it confirms to you there's a wick over there. You got wick to break. It confirms if your stop loss is within the range. It confirms if the risk to reward is good enough for you. So you see from this range, we had about a 1-to-1.96 risk to reward. Profit factor about, you know, like 55 pips, 55.7 pips. Yeah, pretty good, pretty nice. It's like a way to automate your trading to remove as much mistakes as possible. Because man, sometimes we have these trades where we don't know. You know, you're still measuring your stop loss and you don't know if the wick is really there. So yeah, I think like price should just keep moving down here at this point. Are the lines on your chart moving averages? Yes, sir. Those are the 50 and the 50 and the 8 SMA. You can download them for free. Links in the description box. Go ahead and check it out. Trust me, it will give you an additional understanding of dynamic supports and resistance in the market when you use those SMAs. Is TP at a 1-to-1? Yeah, it is like at a 1-to-1.96. But you know, TP1 over here is just about 20 pips. Yeah, that was the idea here. You see, this is the concepts for these entries. We already have the systems built in. So it's nothing like hindsight. This is something we actively are looking at. Usually we get like key support levels. We're expecting price to break below them and then fill up the ranges on the left-hand side. Beautiful mirror. Yes, sir. That is a very nice mirror. Appreciate the stream, Vic. Take care. Thank you, Ellie. I took the sell. No, I didn't. Is this what I use? Yeah, this is what I used to use. But right now, I'm more executing based off of a consolidation breakouts as my main priority right now. But if you're locked into the shotgun play entries, you know, it's a pretty good tool here to use. That's all it is. It's a tool. Let's see. I posted a second image. I use a trailing stop, secure 79% profit in TP1 and another 10% at TP2. Oh, nice. Let the rest run. The trailing stop will close it out. Awesome. Very nice management. Yeah, you see, when you leave a runner, you're always leaving, let's say, like, when you're securing partials, you're like 20%. You can leave like, you know, 20%, 15%, 10%. But 10 feels kind of low. Hey, Bradman, thank you for the sub. Yeah, but it's like the same thing. You know, you got an indicator here as well. Look at this. Super trend. Long, short. EMA 200, VWAP. Do I think 1-to-1 RR is good? Yeah, I think it's good. It's like on average my RR is like 1-to-1. Like if you look at all these trades, all my trades that I take, on average it's like 1-to-1. See? Well, what I do is the risk percentage is what I focus on the most. Reducing the risk, the percentage of risk that I have getting into the positions. But on average, I will have like, you know, a 1-to-1. But obviously my trades run a lot longer. Just because I take a 1-to-1 doesn't also mean it's restricted to 1-to-1. Like since we're like executing off lower time frames, you see they have very nice potential here to just keep running. But on average, I want to secure maybe, you know, like 1%, 2%. How much percent do I risk? Between 1 to 2% per trade. Do you use volume in your analysis? Yes, sir, I do. I think volume is the most important thing, you know. It's the most important thing, so we use volume. Because you can just take trades based off of volume. They give a higher probability of playing out. But when it comes to volume, what you're really looking at is the time that you're executing trades in the market, correct? Like that's what you're mostly focusing on. So you know that's pre-London, London open. We're about to get volume time coming in here in the next 10 minutes. We're gonna pre-New York volume. Then it gives you a higher probability for these trades to play out. Because if you're trading like, let's say, Asia, just, you know, when Asia opens up, obviously you're not expecting any good volume, you know, until a key time, maybe until like Sydney open. Yeah, is it Sydney? I think it's Sydney. Sydney open. And then Frankfurt, you know, you got Frankfurt open, but you know, Frankfurt open doesn't have... Oh, no, it's not Sydney open. It's Tokyo. Yeah, that's the one I was looking for. Tokyo. Because you get Sydney first open and then Tokyo comes in. That's when the volume starts to increase a bit more. What indicator do I use for volume? I use the SMAs, the 50 and the 8 SMA as well. So you see how right here we got the SMA crossover. So notice how the 8 crossed the 50. Volume indication. Right there. If you're trading below it here on the 1 minute, if you look at this beautiful crossover right here, after we had the fake out below this support region, look at the way price came back up, broke above the highs, clean traffic on the left hand side, and then you got the SMA crossover. See how the mouth looks like this? See how beautiful, beautiful confirmation, volume breaks. I love to see it, you know, especially if you're taking like a sell and you got the SMAs in your favor and confluence and not against you. It's usually a very good sign. Because you can bounce off of them, you know, that's the thing. You can bounce off of them. So the more time frames with SMAs in your favor and confluence, it's kind of also getting you on the right side of the market. So it's showing you where majority of the volume is flowing towards. You know, because if you're trading below the SMAs, there's a pretty high chance majority of that volume is already heading towards the downside. You see a 30-minute close below support, 15-minute trading below SMAs, 5-minute trading below SMAs, 1 minute time frame you're trading below that 8 SMA as it's breaking the lows. So it's pretty good. It's pretty good confluence to use. No, I didn't know we can use... Yeah, you can. See, now you can leave a like on the stream because you learned something new here today. You can use the SMAs as a volume indication. I moved that SL also, greedy. This range is already pretty much mopped up here. This is more than this is like 80% of the range has been mirrored. So it's like same thing that happened. Look at this, all the way right here. This was Asia session time. That was, oh no, sorry, my bad. That was like Asia, but pre-London open, shortly before London opened right here on the left hand side. Look at this. Look at the way it filled that range. You know, and look at this. Did you miss a sell? No, you didn't. You don't miss anything in the market. The market has an abundance of moves. Look at this. You gotta sell here. The same area. Literally the same line. You could have taken the same sell that you missed during the pre-London open. See this? Abundance. Abundance of moves. That's why I can sit here and not feel anything about, you know, paper trades. Because I know the next trade is just around the corner. It makes no difference to me. I put 4 EMAs, 20, 50, 100, 200 and use them for bounces. Oh, nice. See what I bought at 37. Awesome. But I hope you all enjoyed the stream today, especially for those of you who locked in from the beginning of the stream. There's a ton of value provided here today. And let's see how this week unfolds for us. I still haven't taken a trade here today. So, you know, hopefully I'm going to take a trade later on. See what the market's saying. And I'll catch you guys in the next one. Adios.
Pull me now, we bout to dip.